now.
Hi, everyone. I'm Imelda. I'm the founder and CEO, or one of the founders and CEOs of Pure Beauty. We're a flower brand based in California. Today, we're going to be discussing, or the topic of our discussion is overcoming bias in the limited capital industry. We'll be starting with Amy, who will be speaking from her perspective.
So my name is Amy Margolis, and I'm a lawyer. I've been a lawyer for just about 20 years now, and I've worked in the cannabis industry long before anybody called it an industry or a space. I've represented thousands of clients across the country and across the world. In 2018, we founded something called The Initiative, which is an accelerator helping female founders grow and raise money. And I'm excited to talk about this topic. I know we're going to circle back around, but my hope is to focus primarily on the legal side and to give some practical advice on deal structure, deal points, and have that be, I think, a good foundation and jumping off point for talking about fundraising.
Hi, everybody. I am Julia Jacobson. I'm the CEO and co-founder of Aster Farms. We are a sustainable cannabis brand in California. I started my career in the retail space as a buyer and actually transitioned to the tech world, which many of you may be viewing from right now, and went through the Techstars Accelerator with my last company. And that was really an incredible experience to gain a lot of the skills I needed to be able to effectively pitch and overcome some of the biases that are in this industry. So today I'm going to focus on really honing in on your confidence and some of the skills that were taught to me that I use all the time when I'm pitching to really get my message across and break through some of the biases. I will kick it back to Amy now, and she will give you some tips and tricks.
So, when we started talking about this panel, I think we've all participated, all three of us, in something that sounds a little bit like this, which is like, basically it sucks and it's hard to raise money if you're a woman. And then we talk about it. And then we talk about how little money comes to women founders. And we talk about how even less money comes to women of color founders. And mostly it's just, I think, an opportunity for us to share that things are hard and shit's difficult. But when we got together for this panel, one of the things we talked about was how can we flip that narrative and not spend so much time talking about the fact that it sucks and talk about what are the practical tools that we could all share in our experience in deal making and raising money and really operating in a world where mostly men control all the capital, and that seems unlikely to change in a significant way, at least in our lifetimes, even if we start to see incremental change. So I wanted to focus on, instead of the, how to approach fundraising, to talking about some of the deal points and ways you can think about structuring your fundraise so you don't wind up regretting what you've done or in a challenging situation with your investors or partners. So we've all agreed to focus on 4 or 5 things that are practical tips and tricks. And so I want to go through mine. I think the first is to, before you go out to raise, to really dig in and decide what kind of structure and what kind of deal you want to do. Are you raising debt? Are you raising equity? Are you using a safe? Are you doing convertible note? What are you doing and why? So, you'll get lots of advice from lots of people, and I'm not here to say how your deal should be structured or that one is better than the other. But to me, that's a foundational issue, which is how are you going out and raising? And the flips, and that takes some education and some learning, right? You have to learn what all those things are and how they function and what that means for your company and how you talk about it with investors, because that is really one of the first questions investors are going to ask you once they get past whether they're willing to do more than one phone call or one email, is what are you raising and how are you raising it? So I would be really thoughtful, and the kind of contrary advice to that is to also be flexible. So I'm sure both Imelda and Julia have had this experience where you go in and you say, I'm raising $1 million of convertible debt and it's at a $5 million valuation, and the investor says, I don't know. No, but would you consider changing that? Would you consider, if we came in as an equity investor, would you consider a different valuation? And so as you educate yourself in how you're raising, you will be able to be nimble around that when you find a good investor. That's number one. Number two is finding a good investor. I'm sure if any of the women from the initiative are watching, they would tell you if we could see each other in real life that I like go back and forth on this piece of advice. But I think for right now, it's right, especially because I spent the last year undoing people's deals when they've gone wrong. So, I think that finding the right investor is like finding the right partner. So there's not that much money in this space. It doesn't matter how many, VCs are circling. It doesn't matter how many times some guy wants to pick your brain about investing in the cannabis industry. There's actually not that much money, and there's still not institutional capital. So you are kind of stuck with these people, and that's not very nicest way to say it. There's some lovely people, but you have a limited pool to choose from. And because of that, you have people who may be more willing to take risks because they're in the cannabis industry. You might have people who are a more opportunistic. You just have different a smaller variety of people to choose from, and those people tend to be just like the rest of us, willing to take some risks. So I think that finding an investor who you trust and you want to work with and who you'll view as a partner is important. That can be offset with the idea that if you need money, you need money. But, and perhaps my third tip should be, you should start raising money before you need money, so you don't wind up with a shitty partner and a shitty investor out of desperation, or a shitty deal. So I don't know if that's 2 or 3, or if that's one combined tip, but I think it's really important. My third tip and trick is that you should think separately about money and control. So, we hear, you can structure a deal however you want, right? So you're going to write documents, or your lawyer hopefully is going to write documents. Don't write them yourself. We've seen plenty of those. And they're going to be able to articulate in those documents all sorts of things, but mostly they focus on money, and they focus on decision making, which is the same thing as control. And so it's important to be really thoughtful about how much power you're giving up. And I think both Julia and Imelda will tell you that you do bigger raises and more money comes in, and people expect more influence. They want a board seat. They're going to want to be involved. They're going to be, the more valuable your company is and the more money you're raising, the more your investors are going to have input. That being said, all of that is something to be negotiated. So I would not seed those issues out of the gate. I would be really thoughtful and say, you know what, I don't think I would enjoy running this company if I couldn't make a few of these fundamental decisions, or I need to have day-to-day operational control, or I will murder my investor. You need to, I think, sit with yourself and your executive team, and depending how big you are, management team, and talk about those things. And if you're raising as a woman and you're raising just a smaller round, then that's something you can talk about with your friends and family and decide what you think will be functional for you. But I would not equate taking money with necessarily giving up control, and all of those things are negotiable. That was my fourth one. My fifth one will be short, and then I'll hand it over. You need a good lawyer. I'm not selling my own services. I think everyone here will agree that finding counsel who can help you and explain everything to you is extremely super important. You will definitely get screwed if you not have a lawyer working on this with you. They are your partner in this. They're going to be able to explain everything. And the companion piece to that is you also need corporate documents. So you cannot go out and raise, you cannot run your company, you cannot and should not do anything, even if it's just you and one other partner. You need to have good corporate hygiene and a good corporate foundation, or you cannot do anything else, and that will be the end. So being very thoughtful about those documents, your contracts, your agreements, your liabilities, being ready to raise, having everything in your data room, all requires having a lawyer help you with that. So those are my 5 tips and tricks. And then I think, Julia, are you up next?
Imelda's going to take it from here.
Yeah. Thank you. I think what's interesting about what you said, even just something so basic as like understanding what you're doing and why. I think for me, just looking back on my first raise, I don't think I really understood what I was doing very much. And obviously I've learned a lot since then. But I think what that highlights for me is just the importance of having like a really strong support system, which again, I didn't have. And I think even just, and like you said, there's a lawyer, and I think maybe I didn't have the right lawyer, but having, a lawyer review, say, your term sheet is super important. But even for me, I think maybe because my lawyer didn't have a strong cannabis background or whatever, I think like some of the advisors I have now would have been nice to have had then, to just like even little things that seem really innocent can have like such huge implications for the future. And looking back, I'm like, oh, why did I do that? It seems so obvious now. But yeah, and I'd be curious maybe after, like, to think like, what do you even say to people that are just starting out and that don't have that? Like myself at that time, I felt, looking back, I'm like, why didn't I find somebody to ask more? Just, you kind of just assume your investors kind of have your interest, even though it sounds so stupid now, but you feel like they have your your best interest in mind, which in some sense they do, but of course there's like a little bit of a push and pull. But I think, sort of on that, I was thinking about this, like, what would I tell sort of the younger, more inexperienced version of myself, kind of like based on what I've learned now. And I think, and Amy, you kind of already said this, I think just accepting the fact that as a woman and a minority, you're just going to have to work a little bit harder from the get-go and sort of prove yourself a little bit more. And I know that sounds really cynical, but I think, the data just supports that. I think 3% of VC funding goes to women, 2% to Latinx founders, 1% to Black. And then like if you're Black and Latinx and female, or, I think the number is like way below 1%. But I think understanding this is just important in terms of knowing what you're working with in order to try to not have it work against you so much and ultimately, change the system. But I think, for point number 2, what I think's worked for me is turning this seeming weakness, into a strength by not just acknowledging it, but making it a compelling part of your narrative. I'm a firm believer that the things that make you different make you stronger, particularly in an industry like cannabis, in which diversity is such an important part of the conversation, and people want to support brands that not just care about, but embody those values. I think, if you acknowledge it and talk about it from a place of strength, it reshapes the perception and also forces people to rethink the way you're being perceived. And of course, not everyone, that's not going to resonate for everyone and all investors, but I think for the people that it does resonate, it will resonate powerfully. My third point is similar. Amy, you already said this, but start your raise before your raise. I can't emphasize this enough. I think just, you don't ever want to be backed into a corner, like trying to get people to find you credible and smart within a few weeks' time. So start the conversations with your investors early on. They'll get to know and understand your business. You build trust. And it's just a lot less stressful and less urgent feeling. And for the ones that don't invest in you, I found too, it's also like, those turned into really good and beneficial relationships for me in a lot of ways. And I think now, that I'm raising again, potentially some of them will invest. So I think that it's almost like networking or just building your support system. My fourth point, which Amy, you touched on as well, is do your research and start with, kind of as a little bit of an extension of, find the right investors. Is for me, that's like starting with investors that are female or minorities. And I'm going to qualify that by saying there's very few of them. Like, I think I met only one female run fund and then no minority owned one. So that's a little hard, but I think sort of as a little extension of that, find investors that already support minority owned companies or at least care about diversity. And for me, there's like a very palpable difference in the conversations with these kinds of investors. So sometimes when I'm like, even when you're running through your deck and you're like, here's what I'm doing around diversity, and here's the things that we're doing with social justice, some people light up and some people, their eyes just glaze over, you know, and I think the former category is the type of investors that I always want, because I know we're going to be philosophically aligned on so many things. And they care about, you know, they care and see the value you bring because you're different, not just in spite of it. And I think that's extremely important, especially for people like myself that care about those things. And then sort of like my fifth thing, you know, along these same lines, practice the values you espouse. You know, this isn't, I think just sort of thinking about it full circle, make sure you hire a diverse team. So expand and authenticate the narrative you sold everyone and show them that it's really real. Also, research shows that diversity significantly improves financial performance, and I don't think a lot of people realize this. You know, I think, and I think that it's becoming even more so with what's happening globally and stuff. Just the narrative is that narrative is super important. And also support, and sort of on the converse is like support funds that are minority owned and women owned. Again, there's not enough of them, but and it assumes you have the luxury to choose. But I think, you know, once you do get into the position of having a little bit more ability to choose, I think it's important to sort of like to make sure that you're supporting the funds that support, you know, that are also support you. And then I think just on that final, the last point is kind of supporting people by sharing information. So, you know, kind of similar to what Amy is saying and doing, which is that, you know, sharing knowledge is power. Share your list of contacts, give people advice, be really generous, I think, with information. And that's super important. I think that's helped me a lot. I probably wouldn't have been able to get as far as we have without people being generous with their information to me. And that's the only way we're going to be able to change the world. Oh, so I'll now, Julia.
Thanks, Imelda. So I think there's something that you said in there that really resonates with what I'm going to focus on here, which is coming from a place of strength and turning that weakness into confidence. I raised 2 rounds with my tech company. One of them was a convertible note, and I have raised 3 rounds with my current cannabis company, 2 of them convertible notes, and 1 of them an equity round. So I have been through the ringer multiple times in the tech world, in the cannabis world, all as a female CEO. And I think some of the things that I have learned the most is, you know, it's a game to some extent, and people are looking for patterns. And if you understand who is on the other side of the table, you can better play in that game and be in that dance with them. And I think that the main variable there is confidence. So, you know, if you think about investors, like all people have unconscious biases. And in the VC world, the pattern of success that VCs have seen over the last however many decades is a white man for the most part, typically an alpha. And that is the pattern that has been ingrained in a lot of investors' minds as equivocal with success. And so when you're going in as pitching as a woman, as a person of color, as somebody who does not fit that mold, I think you need to keep in mind who you are pitching against, for lack of a better way to articulate that. And if you think of some of these white men in their pitching away, a lot of it is confidence. Some of the things that I've been told by my investors over time, by investors who didn't invest in me, by Techstars, by mentors, by advisors, is what is happening in those rooms when those men are pitching. And they are pitching big numbers. They walk in with bravado, not just confidence, but bravado sometimes. They dismiss certain questions sometimes. You know, there is really an air air of confidence that takes over the pitch. And I think I will speak for myself personally. That is not something that is easy for me to do, walking into pitching and asking somebody for money. It is something that has taken years for me to develop, and still today I have a few tips and tricks that I use on a regular basis just to make sure I have that confidence pumped up and I'm going in there not selling myself short in the context of the other pitches that these VCs and these investors are fielding. So I'm going to talk a little bit about some of these super practical tips and tricks that I use. One of the biggest problems I had with my own confidence in pitching was short selling myself on how much I was raising, like how much money I actually needed, as well as being too detailed about things. And when it comes to raising too little, I personally have a tendency to literally raise to the dollar amount I need. I think this is going to go like this is going to go like this, and in 18 months, we will be at this point, and that's exactly how much money we need. The other people who are in there pitching are adding 20% to that, or they're adding 50% to that. People are adding a buffer. The investors are not asking you literally to the dollar what you need to get to your next milestone. They want to know what you need on a higher, more broad strokes level to get there, knowing that there are going to be pitfalls and shortcomings. And so just go in there understanding that you should be pitching probably a bigger number than you might feel comfortable asking for, because it might not literally be the exact dollar and cents that you need. So that is one piece of advice, is definitely go in there asking for more money and budgeting more money to give yourself that buffer and give yourself that allowance. Not only will that be good for your cash flow and your actual business operations, but it puts you into the same category of the amount that you're raising and the numbers that you're talking about with these investors to the other people that they're hearing pitches from. So I have an advisor. Some people, if you don't have a network that is in the investment space, look to friends of yours who have also started businesses, look to friends of friends who may have raised money once before even. Just reach out to somebody who understands what you're going through when you're building a small company and when you're raising investment. I have my advisor who I call on to literally just give me pump up talks. If I'm going to go out and be pitching a VC and I'm nervous about that pitch, or if I'm about to open up a raise, I will call him up and I will literally just say to him, I'm not feeling confident enough for this pitch right now. Like, I just need a pump up call. And, that could be anybody in your life. That could be your best friend. That could be a family member. Just make sure that it's somebody who can speak to and fully understands what you're going through at the moment, so that they can give you confidence that actually relates to what you're doing. So, my advisor will remind me, remember this awesome thing that happened in Q4. Remember this goal that you exceeded. Sometimes when you're running a business, it's hard. You get stuck in the weeds and you can focus not only on the things that are exciting, but also the things that are going wrong. And so to have somebody that you can call on and literally have that call 15 minutes before you go do your pitch to pump you up and remind you of all of the great things that are happening. Similar to that, I have a whiteboard that I call them my brag numbers. And anytime we come across a new brag number in the company, I literally add it to the brag board. And I put that board right in front of me while I'm pitching investors. That way, I'm not looking at a P&L where there are, hundreds of numbers that I could get distracted by. I have the numbers that I want to focus on, and I can direct that conversation back to those brag numbers, so that I'm making sure that I'm really putting our best foot forward and showing what we can do in our success. So I would also say, think big in terms of your projections. So not just in adding a buffer to how much you're raising, but just remember that it takes a lot to start a company. And if you're getting into the cannabis industry, it really is resource intensive. So before you go out and start pitching, make sure that some of the numbers and the variables in your projections are within the context and the range of the standards of the industry. If you're going to start a dispensary or you're starting a cannabis brand and you're looking to raise $500,000, that's not going to be enough. And if you go out pitching for that amount of money, it could make you look naive. So you really want to make sure that you are talking to other people. And like Imelda said, like, it's good karma, put your information out there to an extent, be generous with your information, and find other people that you can share that with, and make sure that the numbers that you are putting together are actually within an appropriate context, and that you look on the same level as the other pitches that are going out there to these VCs. Last two things I would say is, don't be too humble. I have a tendency to be very humble in these pitches. And just remember that alpha male in there is bragging. Like, he is in there with his bravado bragging. So don't be obnoxious, but definitely allow yourself to use that time to brag, and show that through your confidence. And lastly, it's okay to not know everything. And that goes against coming in there with all this confidence, but it doesn't really. Having the confidence to say, let me get back to you on that, shows that you have control over both your business and the information you're sharing. You're not just going to spit something out to appease an investor. You are really putting forth solid, concrete numbers and facts and information for them. And obviously get back to them in a timely manner and do give them the answer to that question. But it is always okay to say, let me get back to you, and is always a better decision than giving some information that you may not feel 100% confident about. So those are my tips and tricks about how I try to keep my confidence up during pitching, because I know that that guy that I'm up against with that VC is going in there with a lot of confidence.
I think that maybe one thing none of us have talked about, but we've all probably experienced, is that like people are going to say no to you over and over again. And like, I think it's easy to kind of internalize that, or to feel like you wasted your time, or to be like, wow, I just did like 20 meetings and nobody said yes. And like, people are gonna say no over and over and over again. And that like, that has, whatever, that is not easy, and it doesn't matter how many times somebody says it is in fact easy. Like, there has to be some coping mechanism for that, and or else you will just wind up, I think, feeling so discouraged. And that just because people are saying no doesn't mean that somebody won't say yes at some point. And you just have to have like fortitude to keep going, even when they say no over and over again.
I would absolutely agree with that. And, you know, there are various ways of saying no, and some of them are easier to take and some of them are harder to take. And it's not always just in the no's. Sometimes you'll get a yes, but getting to that yes can break you down a little bit. And so, you know, I think that kind of goes back to knowing who your investors are and choosing the right people. Not all money is good money. And if you are in the process of pitching and negotiating with someone and they are spending their energy breaking you down and making you feel really bad in the process, that's probably how they're going to make you feel the entire relationship as your investor, which is hopefully going to be years. So I think those are important cues to pick up on in the process. It's like dating.
Imelda and Julia, have you had I'm sorry.
No, go ahead.
Have you had the experience in your fundraising where you have not been able to make yourself ask what size checks people write? Maybe both of you would talk about that a little bit. Like, out of the gate, after you spend an hour, 2 hours, or 4 phone calls, when you're like, God, I don't even know if this person is going to say yes, but I also have no idea if they're writing $10,000 checks or $5 million checks.
Yeah. I think for me, that was like, again, I was so naive on my first round. I didn't have any idea. So some people I'd be like, oh yeah, that person could be my lead, you know, but I didn't even know like that person never leads. They're just like, they write small checks, you know? And so I feel like it was just so amorphous at the beginning, but now, you know, as I've gotten more, as I've learned more and have kind of figured out the way it works more, I think going back to sort of researching your investors, I mean, I feel like that's one of the things that I've gotten much better at, is just like, not just, you know, Googling them, but asking people that know them, how they generally operate, what they're looking for, what kind of check size they do. And that, I think, going back to the confidence thing, I think sort of orienting yourself ahead of time helps me at least feel so much more confident going in, because I'm like, okay, I know what kinds of things they care about. Like some people, like, you know, some people really care about art, for instance. Some people only want your numbers, you know, and some, you know, so just having that going in is so much easier. And even know, you know, I think now everyone I talk to, I kind of know what kind of check they might be giving us, or at least the range.
I have gotten to the point that was incredibly uncomfortable for me. The first round that I actually raised while I was at Techstars, one of my mentors actually said to me, "Is there anything else I can do?" And was literally trying to get me to say, "Would you invest? Do you write checks? What is your check size?" And I was like, oh, you know, maybe introduce me to some investors. I couldn't say it. And he actually said to another mentor, "I'm not going to write her a check if she's unable to ask me as her mentor for money, because that means she is uncomfortable asking for money." And you just it is so uncomfortable, and you just have to break through it. You have to do it over and over and over again until it is more robotic than it is uncomfortable. And I think over time, I completely agree with you, Imelda. I try to do as much research as possible before I go into a conversation, so that I know exactly who I'm pitching and how I kind of want to tailor my pitch. For us, it's, do you care about sustainability? If you do, I'm going to focus on our agricultural practices. If you're more about branding, I'm going to focus on that. But, you know, for me, I now, even if I do still know the check size, I'll still ask. Because again, it's one of those patterns that I think VCs are used to a founder who's raised 1 million times asking that question. It's one of like the cookie cutter questions. And at the end of the conversation, when they say, "Do you have any more questions for us?" It's, in any instant like that, you don't want to say no, right? And I think it's a signal that they're looking for, even if it seems like a stupid question, even if you know the answer to it. I've gotten in the habit of just asking it no matter what, because again, I think it's another signal in the pattern.
I think that's right. That's something I've seen over and over. If supporting on raises is not quite being able to ask that question. You know, it makes me think about, we talked about before we did this, that I did a Zoom webinar where I just like opened my book up, where I just put on the screen every like venture capital family office that I knew with like an email address. And I wonder for you guys, you know, if I do the kind of end work of it, or the like making sure that we're reviewing everything, I sometimes think about, like, if you don't know people with money, or you don't know investors, or you don't have like this ecosystem already, I wonder, to me, that's like always been part of why women have had a hard time raising money, is because they just don't always have those same networks. And so I wonder, like, what we could do for each other. I've not always found women investors to be the most friendly, helpful investors out there. Like, what we could do for each other, since you have a book and you have a book and I have a book, like how we could, and the people we know in this industry have been operating for a while have a book, how we could like share that information in a way that's like effective for people and helpful.
I think when I was raising in the tech industry, Angel List was an incredible resource, because it was like Crunchbase in terms of the data that you can get about both companies and investors, but it was also a social network in that I could see if I was one connection away to this angel or this VC, and you can message and whatnot. I think it would be a real service to the cannabis industry if there was an effort to push information and utilize systems that are traditional in investment, like AngelList and like Crunchbase, because those are public open access forums with messaging systems built in. And LinkedIn, everybody gets a million LinkedIn can become an overwhelming place where information is lost.
It makes you feel bad about yourself sometimes too.
Yeah.
A place where there's reality is suspended and all you see is people succeeding, and I think it can make you feel sad.
How effective is cold email? I've actually never just cold emailed anybody. So if you were to provide a list, and this is just something I don't know, is like how effective is it? How responsive is an investor if you're just like, hey, I found your number on this list, because I've always felt like what's helped me is most of my investors that I've met have just come through introductions and word of mouth. And I think that's helped a ton because they can do, obviously they can, it's always better that way. And so yeah, I wonder how helpful that is or not. And not to say it's obviously better than nothing, but I'm curious, what success people found with just that.
I haven't checked back in to see if anybody had any success. I think that, mine always comes with an offer of an introduction. But I think that's one of the challenges in this industry.
Yeah.
Like, we say this, and I think I said this on the phone with you guys when we were talking, like, it's the kind of like born on third, think you hit a home run people, right?
Totally.
Those guys know how to go raise money. Those guys have their own money. They have family money. And so and then you look, I think, at them, and they're mostly men, and you're like, God, these guys just knocked it out of the fucking park. Like, how did they do that? And it's like, well, they didn't do it. So I think we need to be those extra bases, right? Like, we as a community, which is still pretty small, and like the three of us either knew each other or knew of each other or had met each other. It doesn't take, there's only 1 degree of separation. I think that we spent a lot of time talking about social equity, and the initiative spent some time and talking about gender equity. And I think that we would do best to not view each other like super competitively when it comes to fundraising, because eventually this industry is going to completely consolidate, and we're all going to be on one of 5 teams or 10 teams or 20 teams. And so I think that and it's such a like trite thing to say, right? But like, the rising tides raise all ships. Like, we are better helping each other because we're helping somebody, one of the initiative people, we helped them go to Massachusetts, and now we're working on Michigan to help them go. And like, they need my relationships to make that happen. But when I do a deal like that, then I meet other people and I can help other clients. And hopefully when that company gets to Michigan, they'll reach out to one of their collaborators in California and say, hey, this is a great co-packer. I think there's a fit for you. And we can create that both on the growth side and on the investment side. So I just think we need to be willing to share that information, even though it feels so like well-earned and that we need to hold on to it.
I also think, in our experience, you find there are a couple investors that you find that then open up all the doors. My subsequent rounds of investment have been introductions from people on our cap table. And those are the best introductions because those investors have already been invested. They're getting your updates. They intimately know the company. They know you well. And so, I think one of the most important things, and it's tricky if an investor says no and doesn't invest, but you should get in the habit of asking for introductions to anyone else they might think would be a fit or might be interested in chatting with you. And I think just continuing those conversations, and Imelda, like you were saying earlier, like building these relationships over time, even if they say no, it's still a relationship that can have positive value and that you should continue to nurture, so long as it is bringing positive value.
Yeah, I think that that's a really important thing to do, kind of, because I've always been like, how do you even, given all the obstacles that you're sort of working against, not having those sort of intrinsic connections by birth or whatever, like, how do you even penetrate from the beginning is kind of what I always struggle with, and I think, I think that that's exactly, it is just literally like knocking on people's doors and trying to have conversations and trying to glean. And I think that that's what I've always gotten really, I think before I even entered this industry, when I was living in New York and I was just interested in doing a couple things, I just randomly called like scientists or like just weird people doing things and spent hours on the phone. But what's interesting about that is now I'm kind of rerunning into a lot of those people, and it's, it's good to, I'm like, oh yeah, there's that person I spoke to, which I had thought had no relevance at the time, but now is, has been helpful for a number of things. Ultimately, this is a really small industry in a lot of ways, and like everybody kind of knows each other. So I think having relationships, even if it's not someone that's like an investor that will directly give you money, but a lot of times that farmer knows an investor, or everybody knows each other. So I think even just building like a good reputation for yourself is very powerful.
I think if I were thinking of like a closing thought, it's that like we should not be each other's gatekeepers. Like we should be the ones like opening the gates to each other. Like there's just so few, I don't care like whatever people say, like there's very few women who are in this space, really. Even though we interact with each other, like there's just not. And there's like even fewer Black people, people of color, Indigenous people. Like I think that like we should be putting aside like social equity licensing and programming and all that stuff, just like individually, I think we should be opening those doors. Like we can be those introductions, we can be those connectors. And that my feeling is that, like I said earlier, like that sort of doesn't always feel like it's an intrinsically a good thing to good business decision. But my experience over all these years has been that comes back in a positive way, that like boomerangs back in a very positive way. And like, that's how we build our own network and ecosystem and relationships in this space, is like by being generally like good to each other and making those introductions.
And if you think about it, investors are in the business of deal flow. So introductions are usually very welcomed.
Yeah, absolutely. I agree. I think that it would be nice to find a way to like, because I believe that in theory and try to do it in practice, but you get so caught up in like your day-to-day everything that it's hard to like, what I think about it all the time is like, how do you institutionalize that, or how do you formalize it, and I think there's all these, like, there's so much talk of it, but it's like, what is the way to sort of maximize your time and resource, like I'm always like, oh yeah, I'm here if someone wants to like come to me, and people have just cold emailed me and I'll, but it's hard to like figure out sort of the best way to maximize your giving that, information and resource to someone else.
And I can't believe I'm going to say this, but like, I do think, the initiative has those retreats. And I think, Julia, you were at Females to the Front, and like, normally I hate retreats and I don't want to go to any more conferences ever. But what I did notice, but I want to go to the ones that I put on. But I did notice, and Julia, I don't know if you saw that like one thing we're missing with the pandemic is that like a lot of people did deals with each other there. So there was actually real deal making. People raised money there. It was small enough and intimate enough, and we curated it enough. I think that people actually were able to maintain those relationships, even if it was manufacturers or collaborators, but like all of that happened. And so I think how you institutionalize that is, everyone makes an individual commitment to be available and to follow through. And then I think when we're able to gather again, those kind of gatherings, if done well and are not just like an opportunity for guys to like, blow coke up their nose and go to strip clubs. Like, I think like if you have a real one that's like really trying to do something, I think that's a good place to make deals and to really follow through, because you've committed that time to be in that space, instead of just like having people pick your brain all the time. And, I think that's particularly helpful. And I can't wait for that to happen again, even if I would be sad to have to go to as many conferences as we used to go to.
And those conferences are also great because they provide the structure to
Yes.
make it easier to have those interactions, as opposed to just cold calling. So not only are you in the same room as the people that you might be cold calling, but there's structure around those interactions. So I definitely agree with that. Well,
Yeah.
thank you, ladies. I'm glad that we had this conversation today, and wish that there was an audience here that we could allow to ask questions, but it is what it is. So thank you, everybody, for watching today, and we hope you gained something important and interesting from this.